So today we're going to be talking about one of the most important lessons you need to learn as an investor out there, and that is the difference between an investment versus speculation. And this comes right out of the book, The Intelligent Investor by Benjamin Graham. This is one of the first things covered in the early chapters of that book, is the difference between making an investment and making a speculation. And one of the issues that Benjamin Graham talks about, which is still very true today, is the fact that Wall Street blurs the lines between these two things. So you don't really hear the word speculation being used on Wall Street. You simply hear people talking about making investments. But many people out there who are making investments are actually making speculative bets or speculations. And I want you guys to understand the difference between these two things. And I'm not here to discourage you from making speculations if this is what you want to do. I am going to give you guys my best advice for the strategy of how to speculate. I'm going to do that at the end, but I just want you guys to understand the difference. That way you can determine whether you're making investments or making speculations. Also, if you guys are interested in checking out the book, The Intelligent Investor, I highly recommend that as being one of the first books you read looking to learn about investing. I do have that linked up in the description of this video. Again, I highly recommend that book to pretty much anyone who wants to learn the basics of investing. So what is an investment? This is when you are putting money into a financial plan after detailed analysis of the risk and reward potential. So you have an actual plan, you understand the risks, and you also understand the reward. As an investor, the safety of your principal comes above all else. So the safety of the actual money you're investing is your number one priority. If you see an opportunity out there that has too much risk potential, you're not going to go for it. You're going to understand what the risk is in that investment, and you're also going to be looking for a reasonable reward. So with an investment, a reasonable return is to be expected. You're not looking to double your money overnight. You're not looking to double your money in a year. You're looking to get a reasonable return that beats the market. You're looking to outpace inflation, and you're looking to invest for the long term and build wealth safely over time. So here's a few examples of investments. So number one would be value investing. This is someone who understands the underlying value of an investment, and they invest in something when the price is below the value. So that is someone who looks at the share price of a company, and when that share price is below the actual value of a piece of ownership of that company, they're going to invest in that company, and they're going to invest long term, and then maybe when the price exceeds the value, they're going to sell that position and make a reasonable profit in the process. The big thing is, guys, they understand the underlying value of that investment. Another example of this is real estate buy and hold investment. So this is someone who wants to buy a piece of real estate and hold on to it for many years. They may be renting it out in the meantime. And over a long period of time, they're looking to sell that piece of real estate for more than they paid for it many years prior. Another example is any kind of long-term investment. So this is people who are looking to invest for the long term. They're not looking to make short-term investments. They're looking for a long-term play, and they're looking to outpace inflation and make a reasonable return over time. And hopefully, if you're investing in the stock market, you're looking to outpace what the market returns, because if you're not beating what the market returns, you might as well just buy index funds. So this is what an investment is, okay? So a speculation is putting money into a financial scheme without detailed analysis of the risk and reward potential. So unfortunately, many people out there who are making speculative bets have no idea what the risk potential is. All they know is the reward potential is huge. But when you have a higher potential reward, you have higher potential risk. So that is why a lot of people lose a ton, if not all of their money, when making speculative bets. Now, the safety of principal is not a priority. In fact, it's not even something you consider because you're so focused on that reward potential. Because the thing is, guys, you have to understand the desire to gamble is hardwired in our brains, and this speculation comes from the desire to gamble. People want to make an unrealistic return or an unreasonable return for very little effort. They don't want to put the effort in. They don't want to spend time understanding the underlying value of companies. They just want to make bets, and they want to be right, and they want to have a return that is not equal to the efforts they put in. So here's a few examples of speculations or speculative bets. The biggest one is penny stocks. These are people who are looking to buy the next big penny stock. They're looking to invest in a penny stock and see it triple or quadruple in value or go 10x in value. Or they are investing based on hot stock tips. So they're looking to invest in the next big stock based on what someone else believes to be true. Or just plain gambling. Someone who goes out there and starts gambling at the casino. You're playing the roulette tables or you're betting on horse races. This is all speculation. And I'm going to be honest, guys, it's exciting. It's a lot more exciting than investing because the potential for great returns is there, but the potential for a great loss is there as well. So unfortunately, we're hardwired to make speculative bets. We're hardwired to gamble. And as a result, many people are speculating when they should be investing, or they don't even realize that they're actually making speculative bets. So here's the biggest thing about speculation, is that speculation is a lot of fun when you're right. And when you're wrong, you're usually wrong big. If you're making an investment and you're wrong about your investment, and let's say you're investing in a company and it goes down a little bit in value, you may decide, okay, I'm just going to hold on to this, which is probably your best strategy. And over time, if you made a sound investment in a good company, it should go up in value. But if you're investing in a penny stock that you expect to go way up in price and you're looking to make a ton of money on that, the thing is, a penny stock, there's a very high risk of that stock, of that company going bankrupt. So there's a very high potential to lose everything when you're making a speculative bet. If you're making an investment in a sound company, if you're investing in a good blue chip stock, the odds of that company going bankrupt are significantly less than the odds of a penny stock company going bankrupt. So let me just give you guys this example here. Let's say you're someone who wants to bet on penny stocks. You're going to read the penny stock newsletters and you're going to find some guru out there who's going to somehow know, based on speculation, what the next hot penny stock is. So you go ahead and you dump a ton of money into it, and then next thing you know, the guy was right and you double your money or you triple your money in a very short period of time. What is your next move? What do you do next? How is that a repeatable strategy? How is that even a strategy to just take a bet? Because you're better off just going to the horse races and betting on some long shot horse. It's the same deal. It's like going to the casino and playing the roulettes or playing the slot machines. You have no strategy, and as a result, there's no guarantee that that strategy is repeatable. Yes, you may get lucky once or twice. I'm sure many of us who have gone to the casino have had a good night there, and we leave with money in our pockets feeling pretty good. But that's also the reason why many people go to a casino, make a little bit of money, and then spend it all back because they're trying to repeat the same thing, and it just doesn't happen. And this is what happens to a lot of people who invest in penny stocks, or they're trying to buy the next hot penny stock. A true investment plan is scalable and it's repeatable. Investing in a penny stock based on what someone else thinks or based on whatever you're guessing is the next hot penny stock, that is not scalable, and it's certainly not repeatable. When you're investing, your goal is to be sustainably and reliably right, and you're looking to make a small return for your efforts. You're looking to make a reasonable return. When you're speculating, your strategy is whether or not it worked. Let's be honest, that's the bottom line. The way you tell if it worked is whether or not it worked. You're going to look at it and go, oh, okay, so I dumped a bunch of money in this penny stock. I doubled my money. I guess it worked. We'll try again. With an investment, you're looking to be sustainably and reliably right based on doing your own research and analysis. There's very little research and analysis that goes into making speculative bets and dumping money into hot stocks or hot penny stocks or something like that. Investors compare the market price to the underlying value through a set strategy. So they look at the market price of a stock or of an investment, and they determine whether or not the value, the underlying value of ownership or the underlying value of that investment is above the market price or below the market price. If it's significantly below the market price, they're not going to invest. But if the market price is below the actual value or the value of that piece of ownership, that is when they invest because they understand that the price is below the value. Speculators see the market price as the underlying value. They don't differentiate the two at all. They don't understand the underlying value of what they're investing in, and as a result, they use the market price to determine the value of that investment. Investors make slow and steady profits, while most speculators are making money for brokers because speculators are very active traders. Every time they get in and out of a stock or buy a penny stock and then change their mind, they're racking up commission costs for brokers. So the only people getting rich off speculation are the brokers, consistently rich anyway. You might hear about somebody who makes a good gamble on a speculative bet and they make a ton of money. You also hear about people winning the lottery. That's the same kind of person. It's solely relying on luck and not a strategy. And I don't know about you guys, but I do not see luck as a good investment strategy or something I want to invest my hard-earned money on. It's just luck. I want to have an actual strategy. So if you are someone who wants to do speculative bets, if you want to try out speculation, here's how you guys should do this. Of all the money you have to invest, I would take 5% and put it into a separate account, a separate trading account to make speculative bets, okay? Next, go ahead and make those bets. Go ahead and make your speculative bets. Buy penny stocks, do whatever you want to do options, contracts, futures, whatever you want to do. Make speculative bets and then never add to that account ever in your entire life. Try 5% and then reinvest what you're making, but never add to that account. That is how you make a speculative bet, because the odds are you're going to run out of money, and you don't want to funnel more money into that account because that is obviously a losing strategy. Anyways, guys, that's pretty much all I got for this video. This is the difference between investing versus speculation. And I hope after watching this you understand the difference and you've decided whether or not you want to be a speculator or an investor. And I'm hoping many of you guys see the long-term goal and how you can build money over time by making sound investments. If you guys enjoyed this video, please drop a like. And if you are new to my channel, please consider subscribing to be notified of any future uploads. And as always, I thank you for taking the time to watch this video.